we'll wait for just a couple of minutes for members to join.
Absolutely, absolutely, sir.
Yeah.
Still members are joining.
You've sent just to panelists or what?
Sorry? Oh, it is to everyone, right?
Krishnan is welcoming us here. Shall we start now? Guys, what do you think?
2 minutes. Let's wait for 2 minutes.
Okay. Okay, let's start. So, good evening, everyone. First of all, welcome to this excellent event. Till now, we have always been focusing on Indian stock market, and we wanted to take a step forward to see what is there in the global market. We, as a financial expert, we do have understanding or knowledge of what these markets are, but most of us I spoke to have not ventured into this arena at all. Whether it is global equity market, whether it is commodities, whether it is financial instruments, we always rely 100% on the investment advisors, and we ourselves don't have knowledge in this segment. And this is where we thought of collaborating with Century Financial. And today we have Yogesh, who is a global market strategist, who will take us through this journey of what it is, how we should look into it, why we should invest in this segment, what exposures are there. And of course, our enhanced knowledge that we did with the NSC Academy in terms of understanding the chart, I believe that everyone will be able to put in that knowledge into this arena as well. Because understanding the chart is something similar wherever you go in whatever investment area. The pandemic has taken a toll. Of course, we see that there is a second wave coming in Europe, and there are lockdowns again starting there. We are very fortunate to be in this part of the world where the government and authorities have put in a lot of efforts to contain this spread, and we have seen a very low number. But still, to whatever numbers are coming up, I request everyone to be safe and healthy. Most of you are fully aware that our international annual seminar is coming up soon. The dates are 19th, 20th, and 21st November, which is Thursday, Friday, and Saturday. I'll just quickly explain what we have done and what we plan to do. And I sincerely request support from each of you to participate in that. Register yourself. The 3 day, we have it out into 3 days because we know that it will be difficult for everyone to sit for a longer period on this virtual webinar. So it's like 5 to 6 hours segment every day, and in 3 verticals: professional development, motivation, and entertainment. And we have lined up a fantastic speaker. We'll run the teaser very soon now to give you a feel of it, who the speakers are. Just to name few, that we have Gajendra Singh Ji, the Minister from India. We have our Ambassador, Pawan Kapoor Ji, leadership from ICI Delhi, Ji, Jammu Saria Sir. And then we have Shiv Khera, who will be addressing us. We have founder of Zoho, Sridhar. We have founder of VGuard, Chitapalji. They have got lovely story to talk about. We have got a very good, very nice share market investment session as well, where we have Ramdev Agarwal, Madhu Kela, and Pankaj, along with the ET Now editor. He will be moderating the session, Nikunj Dalmia. So I think from our side, we have tried our best, and we now expect all our members to participate in that and take it to a big level. In terms of platform also, we are looking into various options to give a very good about it. We hope that we will come up with a fantastic platform to enhance the whole feeling. On the entertainment side, we have Amit Kumar, who is son of late Kishore Kumar Ji, who will talk about the journey of Kishore Kumar in his own way, in his own style. We had stand-up comedian, #1 stand-up comedian Amit Tandon, and Kumar Vishwas, poet and political. We also have a small delegate fee, which I believe that every member understands what is it and why it is for. It is to cover up some minor cost here and there, although we are not incurring substantial costs. So we have dropped down the delegate fee to only 150 dirhams for members. And in lieu of that, we are also getting almost close to more than 1,000 dirhams worth of vouchers for member. And these are real vouchers. I mean, you just use it as cash. It is not no gimmicks, no strings attached. You spend a certain amount and you pay from this voucher. We also have tied up for home content insurance. This is one area where most of us, we did a kind of a small survey amongst our members, and we found that most of the members don't have home content insurance. This is becoming very important these days. If you look at few incidents that happened in Dubai and Abu Dhabi, where there was a fire in a building, and people have to stay outside, they have to incur a lot of cost in terms of damage to their property, damage to their own household things. Plus, they have to spend money staying in a hotel apartment or somewhere. This home content insurance will cover all these things. And we have negotiated a very good price for our members. It is just coming at 75 dirhams for 1 year coverage. I request everyone to please utilize it. It is a very good deal that we have negotiated with Avnik. Avnik is one of our biggest sponsor, and they are supporting us as well in this. So request everyone to take it and do register for the conference. So now I will request Shafiq to please run the teaser for the annual seminar, and then Swati to take it over. Thank you, everyone. Some minor glitches, Shafiq?
Yeah, it's going to be sorted. Just give us.
Okay, no problem. Take it. No issues.
Yep.
The Institute of Chartered Accountants of India, Abu Dhabi Chapter, 32nd Annual International Seminar. Adapt, embrace, lead, conquer the future.
Swati, you can take over.
Yeah. We just witnessed the glimpse of our first ever virtual seminar. I request all our members to please register in large number and make it a grand success event. Moving on to today's webinar, I take this opportunity to introduce our speaker of the day, Mr. Yogesh Khairajani. Mr. Yogesh is a global market strategist at Century Financial, a pioneer in global financial investments in the UAE. He is qualified with International Certification of Wealth and Investment Management, International Introduction to Securities and Investment, UAE Financial Rules and Regulations, Investment Advice Diploma, Module 3, UK Regulation and Professional Integrity from CISI, and holds a degree of Business Administration from Indian Institute of Management Sciences, Lucknow. His expertise spans across performance and portfolio management, investments, risk management, financial analysis, and wealth management. Yogesh is passionate about training prospective investors and has conducted over 200 training sessions, seminars, webinars, and workshops. Besides his professional commitment as Century, he also actively manages a trading blog site that talks about investment and trading with a dash of humor. Yogesh is an active writer on Quora and regional publications and loves to travel around the globe. We welcome you all, Mr. Yogesh Khairajani, for today's webinar.
Thank you so much, Swati, for great introduction. So many things I did not know about myself. Now, when somebody else reads out for you, you actually realize that I do this, that, and this. First of all, thank you so much to ICI, the Abu Dhabi chapter, for giving me this opportunity. Neeraj ji and Mr. Krishnan, I've been in touch with all of you. Thank you so much for giving us the opportunity to come over here, be present in this session, and try to spread more and more awareness about what's going on in financial markets. I hope everybody can hear me clearly. If you cannot, just send a text. Yes. If you can hear me, just send it over chat. Yes. Okay. And we'll try to make this more and more interactive. Just give me a second. Request to increase the volume of the speaker. Okay. Let me just try to make this more better. Okay. I'm just holding my mic together so it will become easier and it should be more clear. So normally we have done a lot of seminars, obviously pre-COVID era. I will call it an era because it feels like it's been a while since we have been wearing masks and using sanitizers. So we used to do a lot of seminars and a lot of people used to come and ask more and more questions. And I don't want to break it down for all of you. Only the mode of the communication has changed. We are more virtual now, but the interaction should not get restricted. So you have a wonderful chat option or type option, Q&A option in your Zoom. And while we take this session, please continue to write more and more questions you can. And I'll try to answer once this presentation is over. I'll try to answer more and more questions I can and communicate with all of you as clearly as possible. This session is divided into 2 days. I'm taking a session today on 9th. This is about the investment opportunities post-US elections. And there has been a lot of drama, there has been a lot of chaos. And finally, we have got one winner, which is Joe Biden. We'll discuss more on this. We'll try to understand that what Biden could mean for corporate taxes, what Biden could mean for gold prices, for stocks, which are the sectors which will get benefited from a Democrat president. which are a few hidden gems, which are smaller companies but are on the verge of getting better because of just the area or the sector they are invested into. So this is something which you can get through this session. And second day, which will be on 11th, we'll talk more about the practicality of it, how to buy or sell gold using a live online platform with real-time prices. We will try to also understand that what are different kind of strategies. Just buying stocks, holding it for a longer period of time is what we have understood and learned. But you'll be surprised to know there are so many strategies which can be framed around derivatives. There are pair trades, there are seasonality trades, there are leaders and laggard strategy, there is pair trading strategy, so many strategies which we will discuss on 11th. And we will also learn the platform, how to do buy and sell, how you can take advantage from the falling prices, and then which kind of strategies we can use in case if there is a good amount of volatility in the market. So to begin with, so guys, I'm getting a few hand raises. You can type your question or your query on the chat option, and I'll be able to address that once I finish the session. Okay, right here. I hope everybody can see this presentation. So today's session about global investment opportunities post-US elections. Now, few things which we need to learn and we need to understand about today. We'll be talking about a lot of investment opportunities. We'll be talking about a few companies and few sectors which can get benefited, which might be beaten. But none of these things should be taken as advice or recommendation. This is entirely information based on a lot of understanding of the historical data and what is going on. The biggest example of how markets can be volatile and how it can move is right now. If you're looking at the news currently, Pfizer has just announced that their third trial phase of the vaccine, it shows that 90% of this vaccine is effective. As we speak, the US market has gone up. Dow Jones specifically has gone up by 1,500 points. We have seen gold prices dipping down. We have seen dollar getting stronger. And this has happened in a span of not more than 2 to 3 hours. This is the volatility and fluctuations which we see in global markets. Because what happens is everybody has one question, and especially a lot of investors from India and their respective countries, they have this question that why should we invest into global markets? We are aware about our domestic markets. We know them, we invest. But then why global markets? Why should we be the part of US stocks? Why should I have US stocks at all? And how election is going to impact the world, and why specifically US elections? So these are some questions which always come into mind. And one answer to this is very simple. When you talk about why stocks in US, just for the sake of everybody uses a Microsoft operating system. If not, then you might be using a MacBook, Apple. You might be having an iPhone or a Samsung phone. You might be driving a Ford or a Volkswagen. So I'm talking entirely global markets over here, US markets, European markets. From a PC of Dell to Lenovo to iPad to ordering from Amazon, having an account on Netflix or Facebook, everything what you're using right now is mostly global markets. I'm sure you will be using a lot of Indian products as well. But when we are sitting here, if you're eating at McDonald's and eating at KFC, it's global market stock. You're wearing Adidas or Nike, it's a global market stock. From Toyota to Ford to Volkswagen, everything is global markets, right? So when we are looking at investment point of view also, we have to understand the importance of diversification. They keep saying, and first of all, I'm really privileged to be within this community of such intellectuals We have so many people from specific area of chartered accountants. Guys are great with numbers. So what we have to understand is it's not difficult to realize the fact that you should not put all your eggs in one basket. And we keep saying that, but it actually means that you cannot be very concentrated on one specific area of market. And that's why you diversify. So on the basis of that, diversification is the primary tool of risk management. And why do we need to manage risk? Is because global markets, all kind of financial markets and all kind of investments always have one risk, which is called market risk. And market risk can always be tried to minimize. You can always try to minimize your loss. You can try to minimize your risk by using more and more diversification. You can try to do some market neutral strategies, try to use pairs, a lot of things which you can use to minimize your loss. There will be no investment which will be risk-free. There will be no investment with a guaranteed return. There will always be risk. So what we have to understand in this session that which sectors we can look into, how we can diversify, what kind of investments we should do to reduce down or minimize the risk of the loss. So as I said, something which has been prevailing now for a while, we have seen Joe Biden, Donald Trump, tough competition, a lot of drama going on there. We have seen, we have seen a lot of drama going on in terms of, on the very night of elections, remember we all were in the office and eagerly waiting for the results. And by morning, it felt like it's going to be a Republican president. It's going to be Donald Trump. And even the Senate and the House will also be a Republican. And it got changed as the day passed. And eventually we saw Joe Biden winning most of the votes, 270 electoral votes to win. And we saw Joe Biden as a clear winner. Now, please, I will keep reminding you, if you have any questions, please keep writing over the chat. And once this session is over, I'll try to answer as much questions as I can. This presentation will also go through. So go through it. If you have anything in mind, let me know. Right. Now, we have been checking about the elections, and what we saw was a complete volatile and different markets. So on the day of the elections, US stock markets, gold prices, we saw a movement of at least $50 in gold from 1890, from 1900 all the way to $1955, $1950. We saw Dow Jones giving a movement of 600 points up and down. And these are US stock market indices. These are global commodities which we saw moving in a upward and downward direction, both ways, during this entire scenario. Today itself, on the news of vaccine, we have seen US market going up by 5%. And this is a very significant number. 5% is not the number which you see on daily basis. So this is one of the best days of S&P 500. But moving on, why if the US election is done and Joe Biden has emerged as a winner, what do we have to see next? Was the presidency the only thing which we had to deal with? There were a few more things. There were more votes, more elections which were going on apart from Joe Biden and Donald Trump. And that was about the House and the Senate. For those people who want to know how the US elections work, we've already seen the two candidates. They went into an election, people voted, and maximum electoral votes went to Joe Biden. But every president needs a Congress. And Congress is made of two parts. So what you see right now are three branches of US government. One is the branch which make laws, and then there is the White House, which carries out laws, and then there is judicial, which evaluate laws, which contains the Supreme Court. Now, the very first branch which you see right now, the legislative, which makes laws, is Congress. Every president needs a Congress, and Congress includes a Senate and a House of Representatives. So if you see here on the presentation, you can see that there are 100 senators, because there are 50 states in US, so every state has 2 senators. So 100 senators, and the Senate goes 1/3 of all these senators, they go for re-election every 2 years. Last time it was 2018, this time it was 2020. So almost 33 to 35 senators were up for re-election. And it looks like the Senate may not be a Democrat Senate, it might be a Republican. While the House of Representatives, we have seen elected again every 2 years. The Senate, is elected every 6 years. House is elected every 2 years. So 2018, the House was elected. It was a Democrat House. It was a blue House. And now, again, it looks like the House is going to be blue. When I say the House is going to be blue, that means Democrats stand for, the color of the Democrat Party is blue. Joe Biden coming in as a president, so the White House is blue. The House of Representatives is blue, but the Senate seems to be red. It seems to be Republican. So now, what will be the impact of this composition on gold, oil, stocks? That is what we have to further discuss about, right? Please, I have a notebook in front of me. Have a notebook or a piece of paper to write down the important points. It will really help you to retain maximum information. You can also take the screenshot of what I'm sharing, or just try to click a picture. And if you have any doubts, you can ask later on, or just keep it for your information. So this is how the US government works in 3 branches. White House, supported by the legislative, which is in terms of Senate and the House of Representatives. Now, since a very long period of time, everybody feels that when we were talking about elections, I remember so many people and so many investors, they were on the buying side of the stocks. And everybody had just one concern, that if Donald Trump comes, then it's good for stocks because Republicans are pro-stock market. Now, this is something which has been a very common understanding, because the ideologies of Republicans about entrepreneurship, about promoting businesses, is slightly different from Democrats. So I'm talking about Democrats as in Biden and Republicans as in Trump. So what you can see from 2016 to 2020, S&P 500 went up, Dow Jones went up, the US stock indices have gone up, because first thing which Donald Trump did when he became the president was reduce down the corporate taxes. Now, you reduce down the corporate taxes, you increase the profitability of the companies, their earnings increase, and their revenue increase. So thereby, the stock prices of those companies also went up. And we have seen this happening. That's why whenever the Republicans come, it is a common understanding that stock markets might get a boost. One other reason also why stock markets go up during most of the Republican era, because the regulations are not much on the companies. And the biggest example is the tech. The technology stocks have outperformed all sectors. And when I say about technology stocks, I'm talking about Facebook, Amazon, Netflix, Google, Apple. They have outperformed all these sectors throughout the pandemic as well. So these stocks are not as regulated as they should be during the Republican era. Democrats, on the opposite side, they try to stand for strict regulations on stocks. They also try to ensure that the corporate taxes, the rich should pay more taxes, the wealthier should pay higher taxes, so which means the corporate taxes should be increased, which reduces the profitability of the companies, and thereby there is emotion, a sentiment in the stock market that when a Democrat comes in, markets might come down because they will go for hiking the corporate taxes. So that's the common understanding. Now, what I'm showing you right now is a very, very important thing, because this shows that since Franklin Roosevelt, we have seen on an average, a Democrat president has given a return of around 9%, 9.5, 9.6%, while a Republican has given a 6.2 or 6.3% return on stock markets, which means if we compare since Franklin Roosevelt to Donald Trump, S&P 500's total return, annual real total return percentage, has been in a Republican era, it has been around 6%. In a Democrat, it's been about 9%. So that's where you need to understand that whatever is your common understanding, there is more to it. Because what happens is Democrat might increase the corporate taxes, but they are heavily into government spending. They are into more and more spending of infrastructure. So a lot of infrastructure companies get boost over here. And there are a lot of more public expenditure when that happens. More and more expenditure gives more money in the hands of consumers, increasing the demand for the products and thereby increasing these stock prices as well. So this is a understanding which we went through. So right now what you're seeing is a very different thought of school. Because when you talk to anyone, they talk about, oh, if Donald Trump would have been there, stock markets would have gone up. That was given. But you have to understand that on a historic basis, a Democrat president has given more return as compared to a Republican president. So what is next? So many investors have this question. Elections have happened. So should I buy now or should I wait for it? Should I wait till January when the Senate elections also happen? Because right now what we are looking at, and note this down if you have a notebook, and if you're not following US elections right now, this is something which you have to note it down. We have a blue White House. That means a Democrat, Joe Biden White House. We have a Democrat House of Representatives. So I told you the legislative, the Congress, which makes laws. There are two parties to it, Senate and House. Senate can be a Democrat or Republican. House can be a Democrat or Republican. So right now the House is Democrat. Senate, however, seems to be Republican. So we have a blue White House, a blue House of Representatives, but a red Senate. So this kind of combination, I will discuss it further, that how it can impact the price of commodities and what could have been the impact if it was a complete Democratic sweep, which means Democrat president, Democrat Senate, Democrat House, right? Most important among all this is whether you should be invested. Because a lot of times people feel that if there is too much volatility, it's not good for my portfolio because market is moving too much up and down. And I'm sure a lot of you will have those kind of questions coming in that why should I keep my money if there is so much of volatility? So we'll understand a few things here. This is the growth of your $10,000. If you had put money in S&P 500, S&P 500 is a US global US benchmark of and a stock market index. So like in India, it is Sensex and Nifty. In US, it is S&P 500, NASDAQ, Dow Jones, different kind of indices. Now this shows Democrat or Republican. Had you put your $10,000 in 1933, by 2018, it would be 136 million. Now I understand the inflation bit from 1933 to 2018. But this is just a demonstration to tell you that if you had put $10,000 in 1930, by now your bank balance would have shown 136. It's not that there were no market crashes. So between 1933 to 2018, we are talking about even looking at world wars. We are talking about we are talking about Gulf War. We are talking about dot-com bubble, the great financial crisis back in 2008, the pandemic, everything. But in over the long run, we have seen this S&P 500 moving higher. So this is something which is really important for you to know, to all the esteemed members over here, that going long term on an investment is also something which you can do. And I'm talking about the growth of the index here, not any specific company, because a lot of time some investors have pointed this out, that had I invested in Jet Airways for 10 years, 15 years, at nothing by now. And it's fair because a company over the period of 15, 20 years, we don't know how it's going to be. Maybe Apple is really good today, but maybe in the next 10 years, something happens and it's not. At the end of the day, it's company. But then we are looking at an index which comprises of 500 companies, which also diversifies your risk. So it's not only, the index does not have only tech or banking or FMCG. It's a mixture of all the different companies, and we are talking about these 500 companies. So if you want to know about what kind of companies are there and which are these 500 companies, all you have to do is just Google it. Search S&P 500 components, and you will see the 500 companies which are available in this particular index. It's very easy. So another description of this. Now, why also we talk about being invested throughout? Because and I'm taking example of S&P 500, guys, a stock market index. Most of the fund managers will compare their performance. Normal, if we are talking about US equity and global investments, they will compare their performance to S&P 500. So I have just taken S&P 500 over here, a US stock market index. Now, if you stay invested fully from 1990 to 2019, had you stayed invested completely in S&P 500, the growth of $10,000 around 172. If you have missed out the 10 best days of S&P between these 30 years, if you have missed out on 10 best days and you're not fully invested, your returns reduce down to 50%. If you miss 20 best days, and when I say best days, today is the best day, because today S&P 500 has gone up more than 3%. US market has gone up around 4%, 5% higher. So today is one of the best days of S&P 500. So this is what the best day means. And if you miss out on 20 best days in last 30 years, your return would have gone down by 69 or 70%. 30 best days in 30 years, if you miss, your return goes down by 80%. That is the importance of staying invested, right? So these indices are available for investment, and they are diversified into different stocks, into different sectors as well. Obviously, the fundamentals, they carry a weightage, the Brexit, the trade wars, the pandemics, everything. But then we are talking about a really long-term investment, the one which I showed you on the previous slide, that how hypothetically the $10,000 investment has shown return over a period of time from 1933. Now, this is about staying invested. So we also understood from 1990 to 2019, this is about why you need to be fully invested, because if you miss out on the best days, you miss out on the 10 best days, your return comes down by 50%. You miss down on the 20 best days, your returns come down by 70%. So that's the importance of trading S&P on its best days of the market. Now, how you would have seen this is something again which is a very interesting data. So this is about, since we were talking about elections, this is something which is, and it's a very interesting data. I mean, ignore the graphs or the numbers, just listen to what I'm telling you and note this down. This is the S&P's return, the US stock market index return, ending value 10 years after the start of a presidential election. So this is 2020. So preferably, what could be a hypothetical growth of your $10,000 in the next 10 years? What I'm showing it to you right now, from 1936 to 1945, from 1940 to 49, how the $10,000 grew during every election year, post-election year, 10 years after. So if this is 2020, how your $10,000 is expected to grow in the next 10 years. Now, if you see from 1936 till Donald Trump, 2008 to 2017. So last it was Donald Trump, so 2016 to 2026 is what should be the 10 years. So just once between 2000 to 2009, from the topmost part, if you see the third graph, from 2000 to 2009, your $10,000 would have gone to 9,000. But apart from that, all the years, and these years include the Gulf Wars, these years include the financial crisis, Great Depression, dot-com bubble, 2008 crisis. Amidst of all that, if you see in over the 10 years, the money has grown, except 2000, 2009. So this is again the importance of being invested. And the source of this information from Bloomberg, from Morningstar, Reuters, FactSet, Statista, all different kinds of sources have been used to obtain this information. And the best way, obviously, to understand this is see the back years, how it has performed, and on the basis of that, you can also take a decision. So this is the growth of, again, a hypothetical $10,000 investment if you had stayed invested. Now, moving on, I told you that when we were talking about elections, it was globally a mega event, and that was the reason that why my entire team was up all night in the office. We were looking at the elections, a lot of investors trading and investing that time. There were potential outcomes. One, of course, was Donald Trump, the incumbent president, getting elected, winning the White House while the Democrat House already prevailed, but a Republican Senate, which was again a split government. Another very popular outcome, which was that Joe Biden would come with a Democrat House and with a Democratic Senate that is full Democratic control. In Hindi, what we call, for those who are from different parts of India or India, in Hindi, we call it Poorn Bahumat. Now, that was something that could be the case here, except the Democrat House and Democratic Senate and Biden, everything is blue. So that is your full Democratic control. What we have got right now is scenario third, where Biden has come with the Democratic House still in his favor, but Senate is Republican, which means whatever laws he is going to make or whatever laws he has to execute may or may not pass easily through a Republican Senate. Many of them can be rejected because the Senate is Republican. So he might have the difficulty in clearing down the laws. Now, what does it mean? What does it mean for the market? So now we're going to look at an understanding of the implications on several factors. Democratic presidency, but a Republican Senate. The situation which we are in right now. Corporate taxes. Now, I told you that a Democrat favors a corporate tax. Joe Biden repeatedly said that once in power, they will increase the corporate taxes from 21% to 28%, preferably 31%. And this was something which was loudly spoken and was expected. So that's why Biden's election as a president did worry the investors that because higher corporate taxes will reduce down the earnings of the companies. And that was the sentiment which was going negative. But now with the Republican Senate, there is a possibility that the corporate taxes may not increase too much, or because there is a Republican Senate, so it will not be easy for Biden to increase the corporate taxes. So what has happened now, resulting to which we have seen stock markets going higher and not getting impacted by Biden coming in. There is still a scale of positivity. Second was personal taxes. So again, Republican Senate, it blocks the reversal of tax cuts. There were a lot of tax cuts done during Donald Trump, which kept pushing the stock markets higher. And with the Republican Senate, again, it might block because Biden wanted to reverse those tax cuts, and this may not be that easily possible. So we are looking at a blockage of the reversal of tax cuts. Then minimum wage. Democrats, they also talk about increasing the minimum wage for the people. Now, minimum wage increase for people, it's good. But for companies, again, it impacts the profitability. I mean, all of you over here with a great intellectual capacity understand that what would happen if the wages would increase? It is definitely going to impact the profitability of the company. So those labor-intensive companies would take a hit, like Uber or McDonald's, which are more labor-intensive. They would take a hit if wages go higher. Now, because of the Republican Senate, possibility that the wage could rise, but by a lower extent. If it was increasing, let's say by 15%, then it would be less than that. Similarly, there was a big stimulus coming in. So for those, I'm sure everybody understands the stimulus, but for those to make it easier, a lot of money was expected to be injected by a government, and a stimulus, financial aid to fight the pandemic around $2 trillion, which has been pending for a while. And with the Republican Senate now, the amount which could be $2 trillion could be around 500 billion, because it will not be easy again to pass that kind of stimulus with a different Senate, right? So this is something which we have seen. This is something, let me tell you this also. If this was complete blue, then we would have seen corporate taxes going higher. We would have seen personal taxes, the tax cuts being reversed, wages going further higher, and fiscal policy, which means $2 trillion of stimulus coming into the market. So this something which we could have seen if it was a complete Democratic sweep. But because there's a Republican Senate, this will be the impact on different features or different sections which were of importance. Also, to go further, healthcare, Democrats have always vouched for lower drug prices. Now, with the Republican Senate, again, the drug prices might go slightly down, but again, in control. Regulation to a lesser extent. However, Democrats stand for a strong regulation on financial markets and stock markets. But with, again, a Republican Senate, many of those regulations which Democrats could have put might be lowered. In terms of foreign policy, the stand with China will still be tough. But again, as I said, because of the Republican Senate, the trade war stance, it is still tough. But now with Biden being the president, I think a more diplomatic approach will be used. So a little bit of peace is expected over here. So the retail sectors which are involved here might get a slight boost, and we will look at that list completely of what are the sectors which can get a further boost on this. Now, this is one area. What will be the impact? So another understanding was what will be the impact of this elections on gold, on US dollar. And now I'm going to mix this with the current news of what has happened now is a pandemic has come, which is going on. But now the solution to that pandemic, and I should actually not say solution, I should say what is exactly in the market. A vaccine which turns out to be 90% effective in the trial by Pfizer and BioNTech from a German company. These two companies have shown a positive result for the vaccine. So I'm going to mix both the scenarios today. Vaccine being a latest development just 2 hours before. So next time when I'm coming, day after tomorrow, I will come up with a portfolio also, which we can look due to the vaccine coming in. It will just take a day to put things in perspective, and we can discuss this further. But on a major side, market impact so when I say market impact, that means a global stock market impact, expected to be marginal before this vaccine came in. Now, with the vaccine, we have seen a high impact on market because we have seen stock markets going up by 4 to 5%. So this is higher impact. But because of the presidency, we saw a marginal impact. Stocks moved higher on a positive side because there was a Republican Senate and Biden coming in. So it was a good mixture. Not too many tax hikes, not too high of a wage increase, still some stimulus coming in. So marginal impact was noticed after the presidency. But today we have seen a high impact on market. We have seen a lot of volatility and on the upside. Impact on dollar. Today dollar has gone up, but what was expected was due to a slight increase in the corporate taxes, not on a very top side, but there could be a gradual, a smaller decline of US dollar. While what we are seeing today, because of the vaccine, the outcome could be different because it's a US company and a European company. So if more people are involved into US equities, might again increase the value for the dollar also. But if you look at from the presidential point of view, dollar was still expected to be on the declining side gradually. That would also impact on the gold prices. We should also remember that the monetary policy of almost entire world, the interest rates and the entire world are kept at their lowest. So this is expected to be continuing for the next couple of years. We might see lower interest rates, and that is one more reason that why dollar is still expected to gradually decline. And on the other side, gold. Well, today, if you see the gold chart, it has come down. We'll go through the live platform as well if we have time. Gold prices have come down today by $65. That is right. $65 is a big movement in gold, and it has happened because stock markets continue to go higher due to a positive sign. Gold is more of a safe haven asset, so a lot of people started investing into equities. Gold prices dropped, and currently I think it's around 1880 or 1890. So more than, it's around $80 difference now, and you can see the fall. We'll go through the live platform and see also how much gold has come down. From a presidential point of view, if there was a blue wave like Democratic House, Democratic Senate, and Joe Biden blue in the White House, we would have seen more increase in the gold prices because a lot of stimulus would have come in. The $2 trillion stimulus everybody kept talking about, that would have come in, depreciating dollar and increasing gold prices further. So this is a normal idea of how it can impact the most important things. Some of you also asked about the impact of energy, impact of the elections on energy prices. So oil is something, there are two sides to it. So that's why it is difficult to understand the impact, or it's just not right to give a direction to this, because Democrats, Joe Biden stated that he's planning to reduce down the production of the Shell, the US company. That means lower production from the US point of view, from the US companies, and that means the production of oil is reduced. In future, it will try to meet with the demand, and oil prices might go higher. So good for energy commodities, right? But also at the same time, Democrats, they stand for green energy, green and clean energy, which has been a stand from a very long period of time. During Republicans, you must have heard Donald Trump saying that climate change is a hoax created by China. He did not believe in climate change. Even during his tenure, US exited from the Paris Climate Agreement. So the environment-based companies, the environment-based stocks never grew that much. But if you see the renewables now, the renewable energy, the wind energy stocks, the solar panel manufacturers, they have started going higher because of the Democrat stand. So a lot of exposure towards green and clean energy might also impact the energy prices. Joe Biden has also said that he will ban the fracking of oil. So fracking is a process by which you dig deeper and try to find out where are the oil wells. So minimum use of the non-renewable sources, more use of renewable sources. So the renewable energy for the next 4 years might get a lot of attention. You really need to write this down, guys. And we'll also talk about few renewable stocks and clean energy stocks, which you can also look into this. Now, moving forward, election sensitive sectors. Now it's not Donald Trump anymore, and it is Joe Biden. So we'll look at the sectors which are on the losing side as of now. And smaller reasons, see, healthcare, lower drug prices. So if we see the winning sectors first, we are looking at industrial. Infrastructure companies, basically, or industrial-based companies can be a good idea. Those kind of companies can gain momentum because a lot of government spending. What did I tell you? I told you that under a Democrat leader, we have seen most of the time since Roosevelt, on an average, a Democrat president has given a higher stock market return, or I should say, stock markets have given a positive return higher in case of a Democrat president as compared to a Republican. Reason being that a Democrat government spends more on infrastructures, on industries, and that's why the industrial stocks might get a boost. Another sector which can be good to invest is renewable energy, the green energy, clean energy, renewables, the solar panel manufacturers, the wind energy, any other renewable source. So there is a whole renewable basket. When we see the platform, we'll understand that there are a lot of funds, there are a lot of share baskets which you can actually invest. And these kind of baskets and funds actually show you a group of companies where you can invest into this. And then there are smaller market value industries also. A lot of stimulus, whatever stimulus comes in, more spending. So the local stocks, the regional companies can get a boost. Second thing, oil and gas, energy, as I said, more dependency and more attention to renewables might be bad for oil and gas sector. Plus, also Biden is talking about maintaining good foreign relations with Iran. So they might reduce the sanctions or waive the sanctions off for Iran. And Iran might again start contributing oil to the OPEC, which can continue the production, the high production which has been going on. So that might be bad again for oil companies because oil prices might go down further. Tech is specifically why. Technology, guys, first of all, please write this down and remember this. Technology stocks have outperformed every other sector during Donald Trump era, especially in the last 4-5 years. If you see returns of Tesla, Netflix, Alphabet, has been phenomenal. These are 3-digit returns I'm talking about over the last 5 years. So this is also because of one of the reasons that Republicans do not encourage a much more regulation or regulating these tech companies. So that is also one of the reasons that why tech stocks have tended to go high. But under Biden's presidency, there could be some regulations. Yes, with the Republican Senate, it will not be that much. But then this is where the turning point is. The Senate over here is Republican for now, but their elections are again going to happen in January, first week of Jan. This means right now the Senate is tied between Democrats and Republicans. A final decision will come in January. So if it becomes a Democrat Senate, which means a complete blue sweep, we might see tech stocks going down, because then Biden can create policies and he can execute without any hindrance, because both the Congress and the White House will be Democrat. And then again, as we see, there are communication services. So all these 3 to 4 sectors might get impacted. Communication for the whole idea of net neutrality, which might come back. So that might affect communication-based companies also. So these are the sectors which you could be away from depending on how the political system turns out. But then you can definitely see the winning sectors, which are infrastructure companies, the small caps, and the renewable companies also. Right? Please, guys, if you have any questions, I see a lot of participants here. If you have any questions over the chat, just keep writing the questions. We'll try to answer once this session is over, and we'll try to see more and more information, how much we can spread over here. Now, some growth trends. Now, some of you must be thinking, okay, if we are not sure about which, as of now, the status which we are into, we have a Democrat president, a Democrat House, and a Republican Senate. First week of January, there is a possibility, however small or big, there is a slight possibility that there could be a change in the Senate if the votes they change. And I should say that anything can happen given how US elections turned out on the first day versus on the second day. So I should still see there could be a very much surprise. But till then, which are the growth trends which can continue? So I'm talking about sectors which are related to wind capacity, digital payment, DNA sequencing, internet traffic, digital health data, electric vehicles. These are few sectors where we could see the numbers which you see right now are compounded annual growth rates, and it is expected to go higher and higher with the sectors which I have put. So digital payment, for example, companies like Square Payment, companies like PayPal are the ones which you can focus into. There are companies which are related to internet traffic, electric vehicles, companies like Tesla, companies like, for example, BMW or Volkswagen or Volvo, for example. They are doing research on electric vehicles as well. And there will be a lot of EV or electric vehicles coming out in the next 3 to 4 years. So the demand for electric vehicles is expected to triple by 2025. This is what the expectation is. So these are some growth trends which might continue. And while we are on the subject, the batteries in the electric vehicles come from lithium. So you can also look forward to some lithium mining companies. You can note it down if you have a piece of paper. I'm repeatedly going to say this. So there are a lot of sectors like this. Lithium mining companies, for example, US has allowed in last 3 years, US has actually allowed more than 100 companies to mine lithium just because the demand is expected to be higher for EV vehicles, and lithium will be used to make batteries. So just like this, DNA sequencing related companies, internet traffic related companies, wind capacity related companies, climate, health, and empowerment. These three sectors will continue or expected to continue more and more opportunities. But so these are the trends which will continue, and there can be a lot of companies we can find out. Day after tomorrow, I will obviously share a portfolio with you in relation to what now, once Pfizer has given the news of the vaccine, reopening stocks. Today, if you see the airline stocks, I'll share the live platform with you and I'll show you what is happening to the airline stocks today. Airline stocks are going higher and higher. The cruise liner Carnival Corp stock from $13, it closed yesterday. It is up $18 today. So $5 increase. Pfizer has gone up by $5. A lot of movement which has happened just today as we speak, right? But which are other companies besides the big ones, besides the FANG? Their growth obviously is of importance. But apart from that, so something what we call the gems. Now, gems are solely to understand the fact, first and foremost, these companies are at a level of risk because these are at the early stages of growth. But then every time I used to conduct a seminar or webinar, a lot of investors used to ask me this, that Yogesh, I understand Apple, Amazon, Facebook, these are the big stocks, but everybody's investing into it. But which are the other stocks which have the potential to be these? Like Apple or Amazon was not always the Amazon. It became the Amazon after some time. Microsoft was not always the Microsoft. It became the Microsoft after a while. So which are these sectors which you can look into, especially during these times? So with every new update or with every new trend also comes in an invention or a discovery. Like when Bitcoin came, it gave rise to a new business of e-wallets, right? When cryptocurrencies came in, a lot of e-wallet companies also came in. When cryptocurrencies prices fell, a lot of businesses related to e-wallets, it closed down. Along with a cryptocurrency, also there was a surge seen in cybercrime solution-based companies, because wider acceptance to Bitcoin, whenever it happens, again, it's a ongoing agenda. Whenever it happens, it will always be at a risk of being hacked. So that's where the cybercrime solution-based companies. So like this, with the pandemic, with the surge of the pandemic, emergence of the pandemic, we saw a lot of movement towards technology. Zoom, Netflix, these kind of stocks started going higher because a lot of people started spending on time. Look at this. We're talking on Zoom right now, and Zoom is a company. Zoom has a stock which is going, today it's down, but mostly if you see from last 6 months to 7 months, we'll look into the live platform and we'll see that how it has gone up over a period of time, and not in a very long period. It's like 5 to 6 months and we have seen an increase. So there are a lot of shifts happening because of the pandemic, and things are changing. We are looking at e-commerce based companies, content delivery network, which are trying to manage internet faster. And then many of, as I said, these companies are at their early stages. So we have to understand that there will be a level of risk associated with these companies, and it could be higher than what you invest into. So that's what I said. Whatever I'm telling you guys, please understand your risk appetite. Talk to all of you are experts. But if you need a second opinion, if you need a further expertise, you can talk to the consultants over here. Just take a view and take an opinion on it. That if this is my risk appetite, will it be okay or fair to invest into this? Everybody can have a different risk appetite, different commitments towards investment. So always just try to take the opinion of the expert and then move on. So now I'm showing you some companies which we are calling them gems, but definitely these are smaller market value companies, and their businesses are also different. And these are Bloomberg analyst recommendations, which I'm showing it to you. So the Bloomberg analyst recommendations, if you see how it works, a panel of analysts looks at the balance sheets of these companies and their businesses, and then they give a rating. So buy, hold, or sell. Buy simply means that when we are looking at buying, you should buy the stock, you should hold on, do not take any trade, or if you have a stock, just hold on to it. Sell, that it's not a good stock, you should sell it. Right now, the first company which you see, so these are some different industries, but you can see more exposure towards tech. This portfolio is tilted towards tech due to the emergence of pandemic and how it has actually brought a shift to the world. So first thing, e-commerce platform Vroom Inc. Now Vroom is exactly the same. Vroom Vroom, how a car works. So exactly how the name of the company is justified. So when we look at Vroom Inc., we are talking about the untapped market of used car market. Now, used car market, imagine, so an e-commerce platform to show you the used cars if somebody wants to buy it. E-commerce penetration in the used car industry will reach as much as 50% by 2030. You can take a snapshot of this, a quick picture of this to make sure, or just write it down on a piece of paper, the details which I'm highlighting this. Anybody who wants access to this portfolio can just communicate with us, and we'll be more than happy to provide you all these. And these are just research, again, based on the basis of fundamentals and expertise, market research. So the used car industry is expected to increase. The e-commerce penetration in the used car industry is expected to increase by 50% over the next 10 years. Now, again, a good boost for the online used car platforms. And when we look at e-commerce, the trend for e-commerce, whether it is Souk, whether it is Alibaba, whether it is Amazon, we have seen a lot of people now switching to e-commerce based platforms. Vroom's online used car buying platform offers a number of solutions for consumers, including reducing the time spent at traditional dealerships while also satisfying the desire to complete more of a vehicle purchase online. So guys, these are some things which you can look into. There are some issues also. Like for example, if we are looking at a used car industry, it's highly fractured. Top 100 dealers account for only 8.6% of the market share. So there is obviously a lot of competition and advantage when we look from e-commerce point of view. But as I said, these are why we are calling them the gems, and why we are still telling you that there is a risk which is higher as compared to other companies, is because of their unique sector base. Online selection of vehicles can dwarf the offering of traditional brick and mortar used car dealerships. So that is something which the problem is solved. A lot of people can switch into it, right? So just look at this company. And again, as I said, not that right away you invest into it. You have to read more, talk to our experts, look at the proper price, which fundamental we are looking at. All of you qualified people over here even can just pull out the balance sheets and look yourself. So, but these are some names which have brought investors' attention. And this is just one of those. So we can also look into companies like now Schrodinger, for example. Again, software-based companies, we are talking about medical technology over here. And this particular company, again, it is using a lot of modeling and a lot of AI methods to test compounds to contribute into research and development. So rather people would do it manually. You can use artificial intelligence to discover. You can do a lot of research of all the compounds, which are the mimicking compounds of what, and the actual match. And this work, anything which is done manually, if it is automated, it cuts down a lot of elimination. It eliminates a lot of wastage, and it really speeds up the process. It does comes with a cost, but if it is a groundbreaking, phenomena, then this is something which people would use. So they are selling software to pharma companies, chemical companies, biotech companies, and they have more than 1,300 paying customers, which validates the quality of the software. Schrodinger said that in just the first half of this year, their platform analyzed 257 billion compounds for potentially making it to the market. So this is a kind of revolution coming in for the drug industry, and the revenue could be higher, the revenue margin could be higher, and there are a lot of collaborators coming in. There are a lot of big pharma companies which can use this technology in the drug market. So this is, again, guys, a smaller market value company right now, but the idea of introducing these companies, these stocks, is similar to keep you aware of what is the new sector, which are the emerging sectors coming in. Similarly, Endava Limited. Now, as I said, greatly tilted towards tech. Please keep taking pictures. If you have any questions, keep writing on the Q&A. I hope a lot of people, you're still there and you have not put me on mute. If you have, don't worry about it. I will try to talk to you one-on-one personally if you want individual attention. Now, looking at this particular stock, consulting company focusing completely on technology. You must have heard the name Accenture, and it is similar to Accenture, but relatively smaller. UK-based company, most of its revenue is coming from UK market, some comes from Europe as well. And they have a lot of clients. It is IT consultation, guys. So IT consultation itself means that you get a lot of recurring revenue, because when you consult someone and things go well, they would come back to you. And this is a year-on-year recurring revenue which comes from a loyal customer base. Now, the idea is very simple. The IT services market is really massive, and this is complete tech consultation. So tech consultation, if you see, it could be one of those things. If you're facing a tech difficulty, what platform should be better? Which kind of softwares? So basically a software solution as well, that which are the softwares which can be used to address this problem. So this is what IT consultation is all about. And I'm sure many of you may or may not have heard about this. And that's the idea of doing this session also, to keep you aware about which are the emerging sectors. The thematic sectors are the renewables, but what about the other new sectors which are also coming in and the companies? Next, Bandwidth Inc. Again, we are looking at a broadband broker, leading communication platform as a service, and their market it has grown from 3.3 billion, which was in 2018, to it is expected to be going up by $17 billion by 2023. Now, Bandwidth actually owns this network infrastructure. That is one of the major differences. And when we look around, if you see, when the dot-com bubble happened in 2000, a lot of tech companies actually got wiped out, because tech bubble was something, the tech stocks went down completely, crashed. The bigger companies could stay, but the smaller companies, the huge telecom, there was a huge wipeout. Financial crisis happened in 2008, same thing happened. So a lot of information, again, the market share is expected to go higher, and we will see the online communication, whether it is video, voice, text, all this kind of communication is expected to go again higher. So again, these companies, guys, whatever you see right now, whatever we are doing right now, whether it is texting someone, whether it is doing a voice call on Zoom, video call on Zoom, companies which are related to it will get impacted is expected to get impacted again in a positive way. Then we have Limelight Networks, Fever International. So guys, right now we are looking at few of these names, and you can look into all these companies. I will just try to find some companies which can be a bit different. Fever International, for example, online marketplace for digital services. So Fever, if you try, I have tried personally and I have seen. So many people who are freelancers, they have different services. So, for example, recently there was my CEO's birthday on 8th of November, Mr. Bala, and in their last birthday, I remember I went to Fever International and I found someone who could sing happy birthday in opera style for my CEO. And it would just charge a sum of $10-15, and you do that thing, and he sends you within 2 or 3 days. How do I find such people? Through Fever International. So these freelancers with different sectors, expertise in different jobs, they all connect into Fever International. If you need anything, for example, you want to wish someone congratulations and you want it into a news reading style, you can just go to Fever International and find someone actually doing that for you. Pay a small sum of money, and if you're satisfied with the product, you can even put a review to it. So this is something which is amazing, and Fever is not. We are seeing it right now, but Fever has existed from a long period of time. So this is something again, guys, which we can look into. Of course, the stock got impacted. See, just look at this way: when pandemic happened, a lot of our families, our friends, our fellow members, there was a layoff at work. A lot of people lost their jobs, unemployment, and such people can actually sell their services on such marketplaces. So that's why the stock is again highlighted, because a lot of people have continued to use this platform to sell their services in which they are good at, right? So Fever International is again what we are looking at as a company, could be a great deal in the next few years. Again, this market continues to develop more. Uh, Magnite Inc., a sell-side advertising platform. Again, one of the companies, now this time we are looking at advertising platform, but again, if you want to have digital advertising, you want to buy or sell digital advertising, it's a technology solution to automate the purchase and sale of digital advertising. So again, guys, I'm looking more forward for the tech area. Look at other stocks like Altirex, which again claims 37% of the global 2000, the world's 2000 biggest companies as customers in their data analytics. Software capabilities are perfectly suited for the kinds of large-scale problems in this industry. So again, guys, different company, industry, which is still related to the tech. Moving on, Fastly Inc. Now, Fastly Inc., I want to highlight it because this is the content delivery network. What does the content delivery network do? They're making apps and the internet itself faster, more reliable, and more secure. Now, the internet, the apps which are used to make internet faster, more reliable, more secure, it can be used in a lot of things. Everybody needs a faster internet and being more and more reliable. So one sector which I've not highlighted out here, which has been a lot in talks, was cybercrime solution. Cybercrime solution was one area which has gone a great boost, especially during pandemics. Because I'm not sure about you guys, but I got so many, like most of my friends, they got so many messages of the possible fraud on the debit cards. Somebody did a transaction because a lot of hackers were very active during this time when there were no jobs. So that time, cybercrime solutions chose a great deal. So like this, you want to make internet more reliable, more secure, you need to go to Fastly Inc. Right? So, and these are the best in their industry, what we have highlighted out for you. Smaller companies, but very interesting sectors. Wall Street is looking for a more than tripling in full year sales between 2019 to 2023. So it could show a good amount of double-digit growth this decade. And that could be something which could be very smart for an investor who can be patient. Again, guys, companies with a higher risk could come also with a higher reward, but you need to be patient about it. You need to be understanding your risk before you enter into any of those, right? And if you also see brand names that use Fastly's cloud platform, it is into cloud as well. Pinterest, TikTok, Etsy, these are the companies which are using Fastly's cloud platform. So this is a very major thing because TikTok became the sensation. I'm sure everybody's aware about TikTok. It became the new sensation, and it is something which companies are going to use to advertise in the future. So companies which are connected to these things will also is expected to get a big boost up. So while we are discussing on this, Trupanion, a little different from what we are looking. This is again a factor of a different area apart from technology. This is something about insurance, and you will be surprised, but I'm sure a lot of you must have seen this. This company provides health insurance for companion animals. They're talking about cats and dogs. So the American Pet Product Association, they have seen that the companion pet ownership has increased from 56% of all households, from 56% to 67%. So that is, more people are owning a pet today. The expenditure on pet haven't declined. That's really important. So again, guys, I'm not talking about how the trend works over here, but these are again global companies, smaller market value, but their areas are something which is very significant. Estimated of $30 billion expenditures expected to be spent on veterinary care in 2020. And that includes the Great Recession of 1998 and lockdown of 2020. So this is, guys, something which is very different. Not many of you must have heard about this, but this is something which is going on these days. Insurance, health insurance provider for the companion animals, while the percentage of pet owners increased from 56% to 67%. The expenditure on pets. I have a small dog, and I have to spend more on his grooming and food and care. So yeah, I mean, I've not spent that much money on myself. I spend more money on my dog. Please do not judge me, but dogs and cats, beautiful animals. So this is a bunch of stocks which you can look into. Now, for a separate class of investors, so what I will also do is I will also show you a few more stocks before I switch on to bonds. And please keep writing the questions. Okay. Now, these are stock picks before I completely move on to a different topic of bonds. We'll look into some shares, and please keep noting it down on your notebook. I'm also checking my diary that to make sure that I'm not leaving out on anything. Now, this is stock picks. We made this that if a Democratic blue wave comes in, then it could be a positive. Blue wave meant the complete House of Democrats. But nonetheless, we have a White House president and a House of Representatives is also blue. There are still these sectors which might get a boost up, and these are some companies. So we are looking at three stocks: green, renewable energy sector, infrastructure, and healthcare. Note this down, click a picture, please make sure, because for the next 4 years, you might see a good amount of movement. There was one more sector in this, but due to our position and location where we are in Middle East, it might hurt the sentiment of the country. So we are not putting that sector over here, but that sector has also has got a bigger boost. Anybody who wants to know more about it can individually communicate one-on-one session with us, and we can give you more information. Now, we are looking at renewables. There is a lot of energy plan, fiscal stimulus coming on to reduce the dependency on fossil fuels for the next 15, 20 years. And green energy has always been a main agenda for Democrats. So we might see companies like companies which are related to electric vehicles, companies like Tesla, good. First Solar, which is a solar energy related company, Plug Power, which is hydrogen energy related. Then there is electrical utilities, NextEra. These are the companies, guys. Click a picture, note it down, see if this can add value to your portfolio. We are looking at energy-based companies. Then there is some healthcare-based companies also. Healthcare, we talked about that with lower drug prices, healthcare might get impacted. But then the Affordable Care Act plan, which is Obamacare, which was supposed to be repealed completely by Donald Trump, now may or may not be, given the blue president is in the House. So that could be a slight positive for the healthcare companies. So it's a mixed impact. Companies related to renewable energy, Brookfield Renewable Partners, going to look into, and then some infrastructure-based companies like construction, Vulcan Materials, Martin Marietta Materials. Also, guys, what is not included here? Look at the companies which are involved into base metals, manufacturing metals like zinc, aluminium, because with Biden coming in, the trade war between US and China, which has been going on for a while, it would still be tough due to a Republican Senate, but it could be a more diplomatic approach towards this. And we have next 4 years to find out, and a possibility is there that the trade deals might improve. So manufacturing might actually increase, and that's why the base metal companies could be a good idea to look into, right? So these are some good companies which you can see given Biden has come, and these are the sectors which you can focus after the post US elections, which is already done. And guys, do not neglect the news which has come today. Today alone, the stock markets have gone up by 4% due to on the news of vaccine that Pfizer has given, that 90%, more than 90% chance of not getting an infection on the vaccine. So this is a very important news which has pulled down gold prices and pushed equities of the stocks higher. Now, for those investors who have always talked about bonds as well, bonds is something which is, I should say, we are talking about bonds as relatively less riskier than companies. Over here, we'll be talking about mostly corporate bonds, bonds of the companies. And these bonds are not your traditional treasury yields. These are corporate bonds. They have an investment grade rating. So to go here, just give me a second. We're looking at investment grade US bonds over here. So we are looking at a few companies which are related to oil and exploration. Then we have tried to diversify this, and you can get an access to all these bonds through our investment platforms, and you can see some of these sectors we have seen. We are talking about oil integrated sectors. So the integrated oil sectors means these are the companies which do from exploring to refining to extracting everything, not just one bit. So exploration, production, refining, complete integration. Petróleos Mexicano is a company and who have issued their bonds. Now, there is a 6% coupon on this bond, which is paid every half yearly. The maturity of this bond is 2047, but obviously you can buy and sell bond. If after 1 year you get your coupon, you want to sell it, you can sell it. But every bond has a price. This is $79, so definitely at a discount right now. Petróleos Mexicano is it's a state-owned oil company, which means Mexican government is into it. There is a high stake of Mexican government. It's a state-owned oil company, so that kind of makes it a sovereign bond because of the heavy exposure of the Mexican government behind this. So in spite of a complete beat down of the oil companies, even Petróleos Mexicano has a lot of debt, and that's why you see a higher yield. All these bonds with a higher yield represent a higher risk also, but investment grade in itself means. So firstly, guys, the objective of getting into US bonds is for a simple reason that over a period of time, we have seen a proper returns from US government bonds, and they have shown this kind of resilience over a period of time. When we see about federal government, the Federal Reserve is also expected to do a lot of bond buying. So even Fed also focuses more on investment grade bonds. Now, investment grade, the term specifically means those bonds which have a lower risk of being defaulted. So the list of these bonds which you see, these are at a lower risk of getting defaulted. They still have a risk given the condition of the companies. So when you see Petróleos Mexicano, they have a lot of debt also, but at the same time, it is backed by the Mexican government, and they are expecting a stimulus, more money to be put into this company to make sure that the operations continue to run. So it is giving a coupon of 6.75%. That is decent given the fact what we get here. So if you're into, it's a dollar-based bond. If you keep, so there is a YTM, which is yield till maturity, that the yield is around 8.6% year on year, which means if you buy a bond, you keep it till the end of the year, the expected return is around 8.6%, given the price of the bond can go higher or lower, and you have received the coupons. Coupons is included in the yield. So like this, there are other sectors. There are companies which are Suncor Energy, for example, again, an oil company. Coles Corporation, which is retail. Halliburton is again oil field. Boeing, aerospace and defense. So Boeing also, a lot of you will ask the question that why Boeing, given the second wave and all that. But with Boeing also, there was a lot of backing from US government. Boeing contributed a significant part in the US GDP. During Trump's tenure, there was a lot of backing for Boeing, and I'm sure even in Biden's case, there will be a lot of backing for the Boeing stock. Then there are some tobacco companies like Altria, and then transport services like Federal Express. So all of these are bonds which are available on our investment platforms. Some of them, as you can see, are running on a premium also. So the nominal value of bond is $100. If it is running on 161, 157, these are at premium. And you can see the yield, that's why it's low, because you're anyways buying it higher. But their coupon is around 7.6%, 9.9%. And these are fixed coupons. So and their maturities are like really long term. So if you don't want to hold this for a longer period of time, you can sell it after you get your coupons, expecting the price might be on the higher side. This is for US grade bonds. I'm sure I cannot just not keep any Indian bond here, but there are some investment grades in Indian bonds also. Reliance, these all are big names. I'm sure each one of you is aware about this. Look at the coupons. Again, these are dollar-based. Reliance Industries, Indian Railway Finance, Adani Ports and Special, ONGC, Oil and Natural Gas Corp, and ICICI Bank. So as you can see, Reliance Industries coupon is around 10.2%, but it is at a premium right now. The price is $209. Indian Railway Finance coupon is around 4%. Price is at a discount. Instead of 100, it's 90. So all the bonds are issued at par, especially the ones which are discounted. It is issued at par. So what we have to really understand is at the maturity, it will be redeemed at par. But maturities, as we can see, some of them are 2029, 2097, 2050. So if you want to sell them henceforth, you can. Now, also, guys, why Indian investment grades? Apart from that, you can also focus. Indian is one thing because it's part of emerging market. And emerging market bonds is something, while I was doing some research and I was writing it over here, a good amount, because now with Biden coming in, a diplomatic stand on the trade war. So countries like China can get a sigh of relief. There will still be a tougher stand, but still a diplomatic one. So manufacturing from that area could be better. The monetary policy in the stimulus might continue to be lower. Now that means it's completely loose. When I say lower, that doesn't mean low monetary policy, but completely loose. Interest rates kept low, stimulus coming in, and as a Democrat market known for more and more stimulus over a period of time, and then a weaker dollar. So even for emerging markets like India and China, there is a lot of room from the central banks to do more and more quantitative easing, more and more financial aid. So it may not be the most bad idea to invest into emerging market bonds as well, as compared to some US bonds also. So it's going to be a mixture of the portfolio. And investment grades, as I said, why I'm talking about investment grade, that term specifically denotes that the expectation of them getting defaulted is extremely low. So, except when we're looking at Petróleos Mexicano, it's a state-owned Mexican oil company. But this is a recent progress, which I've not shown it here, that of lately it has been the S&P rating from BBB of lately. Moody's or Fitch, they have reduced their rating, which is very close to the speculative one. So just understand your risk before you enter into any of those. Otherwise, you can look into these emerging market bonds as well, which are available over here. One more important thing, I'm sure many of you must have heard about Vedanta. This is also one bond, and which I will show you at the end, which could be our conclusion here. The Vedanta story it's a very important one, and there is a Vedanta bond also, 3 or 4 bonds which have a very closer maturity date, and yield is really high. But then there are risks involved and something which we have to understand. So shares and bonds of Vedanta took a beating because they wanted to delist Vedanta Limited, and Vedanta had a cash rich. So Vedanta Limited has a cash rich subsidiary called Hindustan Zinc, and Hindustan Zinc had a very good dividend. But normally when Hindustan Zinc will declare a dividend, it does not comes all of it to Vedanta Limited. 50% of that is taken by the shareholders. So the Vedanta group tried to delist Vedanta Limited, so Hindustan Zinc's entire dividend can come to Vedanta, and they could level their debts, which is about $6.7 billion. And Hindustan Zinc is one of the, so Vedanta Limited is its primary source for cash flows, and Hindustan Zinc was one of the most important cash-rich subsidiary. Now, what has happened is, as you can see, what is given in the text, low market value Vedanta, it was a no-brainer. Sweet deal to delist the shares, gain control of Hindustan Zinc. They could not do it because it was a failed attempt, so the stock got beaten down. Now, large investors in the company clearly saw this for what it was, an attempt to buy out public shareholders cheap, and stymied the attempt. Stock price hit a high of 136 rupees before the delisting exercise has now receded to 95. Now, guys, what you need to understand here, there's a look at this current market price and the Bloomberg analyst recommendations. 11 buy, 3 hold, 1 sell. Look at the 52-week high and low and the target price. Stock price have corrected almost 40% this year. Bond yields have surged over 20%. Now, we are looking over here. These are 3 to 4 bond classes which Vedanta has issued. If you see on the left first ticker, there are dates of maturity given: 2023, 2022, 2021, 2024. And if you look at the coupons, 8%, 6.5%, 8%, mid yield is 28%, which means if you hold on to the bond by the end of the year, including coupons and your price, the percentage return what you can get, the yield you can get is 28%. And this is year on year. And if you hold it for the entire next 3 years. But you can see the rating, it is B minus, B3, and it's a non-secured bond. So that kind of makes this a slightly higher risk bond. But if you see the yields are higher, the percentage coupon is around 8%, and the maturity is very close in the next 2-3 years as compared to the bonds which you saw. But now, so let's analyze both the pros and cons. There's a lot of distress in Vedanta because the debts are incredibly large. But because of what is happening right now, there is a possibility that banks, again, they continue to increase the loan which they have given to them. They can extend those loans because the operational working of Vedanta is good. And as the accountants, this entire fraternity, I'm sure you will agree to the point that if their earnings are good, their operations are good, then banks would also not mind to roll over or extend the debts. So that is one thing which is working in favor of Vedanta, which can attract more and more investors because their operations are well. Now, what I was talking about the base metals before, there could be an upcycle depending on ease of trade wars. Most of the best base metals like zinc, copper, aluminium, due to better relations with China, entire manufacturing globally can grow well. So the base metals might again get a boost. So that is also one reason that this company has performed well during whenever there's an uptrend. A lot of people are saying that China is expected to expand more by 2021, around 8%. The arrival of vaccine today is one of the most important things which made me include this in the last, because vaccine coming in, if the production increases, manufacturing increases, and a lot of people, again, consumption increases, then the base metal again will take a boost because of the higher demand. So that is something which is there. More usage of base metals into infrastructure. Being Biden in presidency now, a lot of attention will be given to infrastructure-based stocks, and this is something which we have to make sure that more and more construction, infrastructure, government spending can also increase the demand for base metals. So the companies related to it, and then the bonds related to it for the next 2-3 years, how they can perform. So yeah, this is something which is on the positive side of it, which can impact. Again, now there will always be a disadvantage given whatever we said. If it doesn't happen, then what? Because anyways, the debt levels of this particular company are massive, but then there are positive hopes of them getting back into it. So that's why, again, this is one of the reasons which can perform, why this bond can perform well. And again, you can take a snapshot. Guys, as I said, look at these ratings. This is slightly higher risk than what we have discussed before. So before you enter into anything, understand your risk appetite. We are a great community here, so we don't want any misunderstandings. Please talk to us before you invest anywhere. Just to the ICI members, to the Abu Dhabi chapter, our consultation is available to you. Whether you are investing or not with us, that's a completely different thing. You want trainings, you want research, everything will be provided to you. But you need to have a proper understanding of what is going on here. So these are a few things, something which I wanted to discuss, and I'm sure if a lot of you would have questions over here, Neeraj, if there are any questions, please, because I cannot see anything on the chat right now. But if there are any questions, I'll be more than happy trying to answer this.
Yeah, I think Swati will moderate the Q&A if there's any.
Yeah. We have 2-3 questions, Mr. Yogesh here.
Tell me, sir.
One is, would like to know about the personal tax considerations in trading in US stocks. Suma Rajesh has asked this question.
Okay. So, Rajesh, thank you so much for your question. By default, US tax have US stocks have a dividend tax of 30%, which gets deducted at the source. So the total dividend which comes, it comes minus the tax in your account. So if you buy a stock today, let's say ExxonMobil, which has a very good dividend yield of more than 5%, and the annual dividend which is given per share is around $3. So you reduce 30%, whatever is the net dividend which you will receive on your stock. Okay, I can see it here. What about, I can see these questions now.
Okay, sure.
What about holding charges for equities for US stock? Good question. So in terms of derivatives, Mr. Ravin, if you are buying these stocks and holding on to it, the holding cost with Century is incredibly less due to the lower interest rates also. So as of now, it's pretty negligible. You can consider it around 0.9% to 1% of the total value you buy for the entire year. So if you buy a stock and keep it for a year, let's say if you put $100,000, probably in the entire 1 year, 0.9% of that total value will be the holding cost. Whatever happens in the entire 1 year, obviously there's a capital gain or capital loss is completely yours. But because of a lower interest rate era, you really get a benefit of completely low. Because in our case, there is no broker markup for the holding cost. So this is something which it depends on your derivatives provider also, because if there's a broker markup, then it can go to 3 to 4%. If it is not, then definitely 0.9% to 1% given on the current status of the returns. If you're doing derivatives, if you're holding direct equities, then there is no holding cost. If you're holding direct stocks, which also you can do, it will not have daily charges. So what will be there? Daily holding cost means if you have bought the stock worth $100,000 today, calculate 1% of 100,000 and divide it by 365 is what you will be charged daily by the end of the trading session at 1 a.m. If you hold it for 10 days, then you'll be charged for 10 days. But the yearly percentage divided by 365 is what you're charged. So if you see day on day, it's very less. Yeah, if you see it year on year, then you will see, okay, 1%. When you share the portfolio on, could you highlight the stocks which are good as buy and hold strategy and are also Democrat, Republican neutral? So in the presentation, we talked about some sectors which are completely neutral. So if you look at the infrastructure stocks, irrespective of who comes as a president. So now let's face it, that Donald Trump is not going to be a child about it and take this to the court because the difference is huge. But he's Donald Trump. When you take a toy from a 3-year-old, he just not let it go. He's going to cry about it. So we might see this going further to a court, all that. But in between of that, sectors like renewables, which are related, companies like Tesla, infrastructure stocks like Vulcan Materials, base metal companies, these are there which are neutral. So, and few tech stocks which we talked about, e-commerce related companies, these are good. Not all the tech stocks, but then e-commerce related companies can be a good idea. Also, a lot of reopening companies like airline stocks, Southwest Airlines. So I will for sure add this on the portfolio, and we'll discuss this again on Wednesday. Is there a chance for aviation, hospitality to rebound? Exactly what I was talking about right now. I was checking today itself. Southwest American Airlines or the airline stocks have gone up by 10-15% just on the news of a high probability of a vaccine. That means all these stocks were scared of the second wave because cases are increasing in Germany, everywhere in Europe as well. So they were down. But today, if you see most of the airline stocks, they're up currently. And so for now, if you even want to see the aviation sector, stocks like Southwest Airlines, which are domestic airline stocks and have a very good balance sheet, because you will relate more to the balance sheet area as compared to other airliners. Southwest Airlines has a stronger balance sheet, and these are domestic travel. So if you know, even during the pandemic lockdown, domestic travel was the first one to begin. So focus more on the domestic airlines for now, given vaccine comes or not. So that is something which you should look into. I'll definitely give you more stocks which you can see, Airbus and Boeing as well. What's my short-term and long-term view on gold and silver, keeping in mind all the geopolitical development going forward? A long-term perspective on gold was on the buyer side. And whatever I say, there's a disclaimer going right here on the subtitles. You may not see it, but it implies. But given how the situation has moved with a vaccine coming in like this, today we have seen a decline in the gold prices. But in the next 4 years, we will see a lot of stimulus and government spending, which means dollar gradually might get weaker over a period of this term. And there will be uncertainty, especially in January when the Senate elections start again. We might see a lot of volatility in gold. So overall, expected to be on the higher side over the long term, but a lot of volatility. So please make sure that you have your stop losses if you are trading. And over a long term, in a span of 1 year, gold has the potential to move at least $400 up and down. If you see last year from $1,500, it went to $2,000. So this is something which can happen. short-term view on Tesla, Amazon, and Apple. Glad to have a Republican Senate, so the regulations on these tech stocks may not be that heavy. Tesla could be a good stock to enter because of the clean energy and the renewable part. Plus, few things which you need to know about Tesla. Tesla has increased their production. They set up a gigafactory in China. And they have talked about increasing their production. Their new vehicle got a lot of good response. They are meeting on the production demands. They have given earnings surprises. Earning per share of Tesla has given repeated increase and a great percentage surprise. So I think a final nail in the coffin, a good battery with 50% efficiency in the capacity can be further good for Tesla. So I think short-term bullish. Amazon as an e-commerce company, again, given that Senate is Republican and there are no further regulations on these companies, still on the positive view. So tech stocks, given if there was a complete democratic sweep. So guys, I'm again saying complete democratic sweep because in January, there's a very slight possibility of that happening. So please keep this thing in mind that if Senate changes to blue, then whatever I'm talking about right now, the tech stocks might get troubled due to increased regulations by Joe Biden. So for now, better to keep invested into neutral themes like industrials and renewables, and renewables also like EV vehicles like Tesla. I showed you thematic sectors like DNA sequencing, content, internet content related, e-commerce related platforms. You can look into it. Which is the right companies to buy, NIO or Tesla? So Tesla being having a proven track record, a better choice as compared to NIO. NIO's argument will always be it's a growing company, it's in China. But we have seen previously that NIO failed to deliver on the production capacity, the IDS production capacity. If the demand increases, will the company be able to meet the production? NIO is good. NIO has stock prices have gone up, but you have to decide for yourself that do you need stability or volatility? You're going to get volatility in both of them. But Tesla being on an uptrend, it has become investors' favorite for now. And with Biden coming in, I would suggest a divided exposure into both. Be more, again, US is there, but there is no harm to take this exposure in China, given a diplomatic stance can be followed during the trade deals now. So again, improved manufacturing and improved relations with US is only going to have a positive impact on these stocks. So have a divided exposure. Do not get concentrated to one specific thing. As a newcomer to US market, how you suggest to proceed, and in case of any assistance required, how we can reach out to you. You can reach out to me anytime you want to. The best thing about me is I'm not married, so I do not have much of a life to go back to. So you can reach us anytime. And
Yogesh, I have one question here.
Yes, please ask.
Yeah. No, actually, we would like to know for the larger audience as well, because
Yes.
most of us probably are not aware of US market
Yes.
too much.
Yeah.
And so what kind of hand-holding would Century Financial provide in case if we get associated with you? That probably most of the audience would like to know. And secondly,
Okay.
do you have something like portfolio management or something which you can handle on behalf of us for a small amount? And I know maybe if you say that come with $1 million, probably we'll handle it, but most of us not be there at that level. So to begin with, is there some kind of a portfolio management that you can help with, or
Okay.
what is the hand-holding thing that you can do?
So Neeraj, portfolio management, completely not. We are financial consultants, so our expertise lies on doing much more groundbreaking research for a lot of investment opportunities in different markets. I can understand the concern due to the lack of time or lack of expertise. Sometimes people feel that, okay, let the person manage my funds and I just have to do everything with return, which kind of in last 12 years, I've seen the industry changing. And what we have seen is a lot of people actually want to get involved into where they're investing. So what we did, instead of managing the portfolio a bit, we made sure that anyone who wants to understand or needs any type of consultation, good support levels to enter. Let's say for NIO or for Tesla, which are the good support levels to enter, good support levels to exit. Resistance and support lies where the market is trending towards. Information and updates about what we talked today about Pfizer and what is the impact on aviation industry. So this kind of research we can provide. We can give you as many trainings as people want, whether they are a client or not. As many trainings you want for the platform, for the research, for the strategies, Century does it. At any point of time through Zoom or through personal meetings, you can come to our offices, sit, watch the markets live and learn with us. And this is without any cost. So we make sure to make clients more and more aware, and we'll definitely tell you how to buy and sell and use the platform. So that's all the Wednesday session will be about, and how the consultant can support you in terms of fundamentals when any news is coming in. So on the night of US election, all my consultants were here. Some of the clients even came to witness the live elections and the volatility, how it is done. So we are much more with the investor, rather being on the side where we differentiate ourselves being the fund managers. Fund managers do not understand the pain of losing because they just have to manage the funds. From our side, we make you understand that how it's going to work.
Yeah, sure.
So I think, okay, most of the questions. I was trading with the CFD Century 15 years ago. Will this account will still be active? We really have to check 15 years ago. I've been in the company from last 12 years. So I really have to talk to someone who is there for more than me. But account may be active, but the platform has completely upgraded. So the chances are that you might have to switch it to the upgraded platform, and one relationship manager can help you out. Do you have a setup in Abu Dhabi? We are currently on the verge of having a setup in Abu Dhabi. We have been coming to Abu Dhabi a lot of times in World Trade Center using SurfCorp offices. But now, fortunately, after the pandemic, we learned the need of having establishment there. So soon we are going to have a setup in Abu Dhabi as well. Presentation. Yeah, this presentation can be shared absolutely. But I hope that you have taken the pictures of this, because sometimes we have regulatory concerns over here. So I just have to make sure that everything is kept there, and it absolutely can be shared with the members also. But you have to promise that if I share the presentation with you, that you will show up for the session on Wednesday and not leave. My plan was to give you this on Wednesday. So just a few more questions, I think, from the higher side. Buy and sell spread may result in a loss or much lower return. So Neeraj, that was also, I think, one question from you itself. So buy and sell spread is the income for the market maker. If the spreads are extremely high, which sometimes happen in the times of volatility, then yes, because you're buying at a certain price, and when the spreads narrows, you face that loss. So the idea is very simple. Better always to make sure that when there are volatile sessions going on, you keep a proper stop loss and take profit to avoid any further losses. But choose the provider which gives you more stability in terms of spreads, or at least the price quotes, because many of the people don't know. In derivative platforms, there are a lot of other providers as well who provide the prices, market quotes also completely different from the market. And when I say completely different, which means a higher gap. So we have to avoid that bit. Otherwise, spread, if your quantities are lower and your risk is manageable, it is not going to impact your portfolio too much. It's a very small thing. Know about the personal taxes, okay, holding cost. Any credit that can be claimed or dividend tax? I'm afraid maybe not. I think capital gain, there's no capital gain tax, absolutely not. Daily holding charges, portfolio, short-term view on gold, aviation, newcomer, set up in Abu Dhabi presentation. Okay.
Leave some suspense for Wednesday.
Yes. So guys, any other questions if you have, I will be available. My contact details can be shared by everyone. And if you have any more questions, please make a list of it. I'll come on Wednesday. And I hope this session was worthwhile once again. To all the members here, it's a privilege to sit and talk among the intellectual community like you. and more than happy to get a chance to do this. And most important thing, I'm sure a lot of you have friends, families, or relatives who are into the healthcare sector, and they have risked their lives day in, day out to keep us safe. So a big vote of thanks on behalf of Century Financial, my team, myself, and my family for that matter. To all of them, a big vote of salute, and I hope all of you remain in good health. Pandemic is something which happened to all of us. It kind of united us as well, and I'm sure that it will continue to do same. United us, but at a 2-meter distance, of course. Hearts are connected. So once again, thank you so much, guys. If you have any further questions, I'll take it. Otherwise, let's meet again on Wednesday.
Thanks a lot. Thanks a lot, Yogesh ji. It was a pleasure, to see your presentation.
Thank you.
My name is Krishnan. I am the General Secretary of the chapter. Thanks a lot for all the members who have attended the session. It was very interesting and very insightful, very informative session. And before I would give a formal note of thanks, just to remind you, the annual seminar is on from 19th to 21st. It's from Thursday to Saturday. It's going to be the evening time from 6 to 10 o'clock. And it is not going to be the virtual platform, it is going to be the digital. So the platform where we have invested, the technology which we are going to use is altogether different. It is not going to be on the Zoom. It's altogether an exciting platform, which we'll be sharing the teaser in the next couple of days. So it is, in fact, we have the fee which we are charging is only 150, as Neeraj just mentioned in the beginning. And with the benefit, the number of speakers, we have close to 24 speakers, which consists of 3 days, and each day we are keeping it a technical, motivational, entertainment session so that it will be more informative. And at the end, we are closing with always happy ending with the entertainment session. So it will be a technical, motivational, and entertainment session. So the fees which you are going to charge is 150 for the amount of speakers. We have close to 24 speakers, and it will be more informative, more knowledge, and they are all top-notch CEOs. Because of the COVID situation, we are able to get all the best speakers on the virtual platform. Otherwise, it is generally difficult to get these people on board to Abu Dhabi. In fact, we have been trying some of the speakers for the last couple of years. Unfortunately, they are not able to come because of 2 days or 3 days of visit over here. Okay, the offers are, don't wait till the last day, because the offers because we are giving along with the delegate vouchers, the offers may not till the end. So please register as soon as possible to avail all the delegate vouchers and the gift along with home content insurance. Okay, formal vote of thanks to Yogesh. It is a wonderful session. In fact, generally most of us are aware of the US market. We are not aware of much of the US stocks. That too, in terms you are explaining how the Democratic and in the Senate and the White House and also the House of Representatives, how it can change the market in the next couple of months, and the stocks in which we have to rely on, and the number of stocks which you are talking about. In fact, most of the stocks, we are not aware of the stocks are existing. As you said rightly, we are using most of the stocks, we are using most of the products, but we are not buying the stock, like we are talking about Adidas or the car and other things. It is a very informative session. And thanks a lot to the members and sponsors for all of us for attending, for spending their time. We are leaving it tomorrow open because there is no event tomorrow. Reason is it is IPL final, so we don't want you to miss this session because of IPL final. That's why we are given a gap so that whatever you learn today, you can have a look on it. You can come fresh on day after tomorrow. Generally, we don't do a technical session like this before our event, but this time we are doing it a different way because this is after the US election. We know this is the pulse of the people where people want to learn more and more about the US stock or the markets where it is heading. Thanks a lot once again.
Thank you, sir. Thank you.
Session. We look forward to meet you on 11th along with all the members and the participants. Thanks a lot.
Thank you, sir. Thank you, everyone.